Welcome to Stocks Review. Click the subscribe button for more up-to-date short stocks and portfolio review. Today we are going to review our 25 growth stocks portfolio, but we will review some important financial news first, as changes in the financial environment may greatly change what stocks the market favors in the short or long term. The market has been down this week and may present an opportunity for buying and accumulate equity. United States stock market index traded at 4,255.29 this Friday, April 22nd, decreasing 2.77% since the previous trading session. Looking back, over the last 4 weeks, US 500 lost 4.51%. Over the last 12 months, its price rose by 1.8%. Looking ahead, the U.S. stock market index is forecasted to be priced at 4,160 by the end of this quarter, and at 3,889.82 in 1 year, according to analysts' expectations. There are countless factors contributing to the fluctuation of stocks, with short-term fund flow between different assets having the greatest impact. The yield on the 10-year U.S. Treasury note, which sets the tone for corporate and household borrowing costs worldwide, consolidated around 2.9%, not far from an over 3-year high of 2.98% hit in the prior session, with investors pricing in chances of an increasingly hawkish Federal Reserve stance. Cementing such a view were increased inflationary pressures, as annual inflation hit 8.5% in March, a new 40-year high. On top of that, when speaking as part of an International Monetary Fund panel, Powell made clear that the central bank remains committed to taming inflation while opening the door for a 50 bps interest rate hike in May. Along with runaway inflation, the job market has been showing signs of being extremely tight, which in turn brought forward the expectations of sharper interest rate hikes to cool an overheating economy. Now about the oil. Brent crude futures fell almost 2% to around $106 per barrel on Friday, posting a weekly loss of nearly 5%, weighed down by the prospect of higher interest rates, weaker global growth and slower demand from top importer China, even as the EU considered a ban on Russian oil. Concerns about the Ukraine conflict fanning inflation and denting economic growth dominated trading in the second half of the week, with the IMF slashing its global growth forecast by nearly a full percentage point. Federal Reserve Chair Jerome Powell on Thursday indicated more aggressive rate hikes ahead to control inflation, dragging risk sentiment. In China, Central Bank Governor Yi Gang said Friday that the country was not immune to external shocks and faced pressure from COVID outbreaks. Meanwhile, volatility is expected to continue, with oil markets remaining tight as major producers struggle to meet output targets, while the threat of an EU ban on Russian oil looms. Next, we talk about inflation. Inflation rate in the United States is expected to be 7% by the end of this quarter, according to analysts' expectations. In the long term, the United States inflation rate is projected to trend around 1.9% in 2023, according to our econometric models. Then we look at gold. Gold declined almost 1% to around $1,930 an ounce on Friday, the lowest in 2 weeks, and posting an over 2% weekly decline, pressured by a strong dollar and rising U.S. Treasury yields as investors prepared for the Federal Reserve to raise interest rates to bring decades-high inflation under control aggressively. Investors remained cautious of geopolitical uncertainties and the risk of stagflation, which may drive safe haven demand and support gold prices. Bitcoin is also a relevant player in the financial market now. Bitcoin traded at $39,438 this Sunday, April 24th, decreasing 150.1 or 0.38% since the previous trading session. Looking back, over the last 4 weeks, Bitcoin lost 10.18%. Over the last 12 months, its price fell by 21.27%. Looking ahead, Bitcoin is forecasted to be priced at 37,439.0 by the end of this quarter, and at 32,028 in 1 year, according to analysts' expectations. Real estate is one of the largest wealth components in the United States. We should always keep an eye on it. Mortgage rate in the United States is expected to be 5.5% by the end of this quarter, according to analysts' expectations. In the long term, the United States MBA 30-year mortgage rate is projected to trend around 6% in 2023 and 5% in 2024, according to our econometric models. These market conditions have probably affected the performance of our portfolio. Now we come back to our portfolio review. This is the full list of 25 stocks as of April 23, 2022. The total paper value will reflect the actual performance of the portfolio and market volatility. The total value is 67322. It was 72,030 previously. The portfolio has decreased in paper value, however. It presents a nice opportunity for buying and accumulating more shares. The true underlying value and fundamentals of this portfolio over time will probably best be reflected by the total earnings of all shares. The portfolio PE ratio is 50.76, previously, it was 55. The total earnings of all shares has increased from 1308 to 1326, that means the fundamentals of this portfolio has been growing. This is really good. The total trailing 12-month dividend is 115.2, same as previously. The portfolio dividend yield is around 0.0017%. Previously, it was around 0.0016%. There was not much change. Overall, this portfolio has decreased in paper value. This presents a good opportunity for long-term investing. The true fundamentals that we should be looking at, that is the total earnings of all shares, has increased. That means we are on the right track in investing. The trailing 12-month dividend is the same. The dividend is really small, but may give us a hint on the overall financial conditions of companies in this portfolio. You can have your own version of this portfolio and play around with some ideas to add or remove some stocks. I will update this portfolio weekly and track its performance. We will review the stocks in this portfolio in the near future. Now that's all for today's 25G portfolio review. Click the subscribe button for more portfolio updates. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.